A decline in beef production and beef cow slaughter has slowed. We'll find out more coming up. Welcome to the Weekly Livestock Market update on Brownfield. I'm your host, Meghan Grebner, with us as always to talk all things markets, University of Missouri, Scott Brown. Good afternoon, Scott.
Good afternoon, Meghan.
All right, we'll talk some cold storage coming up. We'll talk some livestock slaughter numbers as well. But to kick things off, let's recap what happened this week in the markets.
Yeah, on the cattle side this week, fed cash cattle were about $1.10 higher on the week. We got stronger feeder cattle markets this week. They were anywhere from $4 to $9 higher. Some heavier weight calves as well were even higher than that. The June live cattle futures contract was up $2.95, and the May feeder contract was up $6.25. The choice box beef price fell 80 cents this week. On the hog side, cash barrels and gilts, 20 cents lower this week. We saw the June lean hog futures contract close down $2.50. We also lost $2.35 in the pork cutout value. Both hams and bellies were down this week.
And we're going to talk a little bit about slaughter pace coming up in a second, but I want to talk a little bit kind of about that correlation, right? We've seen that pull back a little bit this week. We saw prices pull back a little bit this week. We saw hog weights pull back a little bit this week. Is that just kind of, I don't know, like a little bit, maybe a little less demand or a little bit less aggressiveness? What's kind of pushing this breath, maybe, or a pullback on the cash hog side of things?
Yeah, well, so I think, Meghan, a lot of it is we've been strong for a few weeks here in a row. So we've seen a very good run on hog prices, very good run on pork cutout values. Taking a little breath here, maybe before we get into rearing season, maybe what's in store, especially, when we get to some of the other reports that don't suggest more pork supplies coming, probably suggest we still have some room to travel up as we get in the summer months.
Well, that's not always a bad thing, I suppose.
All right. So, however, having said that, I always like to say risk management, protecting against that downside if something were to happen is important. But to me, it looks like we still have some opportunity here.
All right, so let's take a look at these slaughter numbers for both cattle and hogs. We had some pretty big weeks last week, especially on the hog side of things, and definitely a little pullback. And that was really, we're talking on Friday, so today, and then as we look ahead to what's happening or expected over the weekend.
Yeah, that's right. USDA tells us for the week ending April 27th, we're going to have a run of 613,000 head of cattle this week. That's 7,000 head less than last week and 14,000 head less than where we were a year ago. On the hog side, as you suggest, a lower hog run this week, 2.379 million head of hogs this week. That's 108,000 head less than we did last week and 1,000 head less than what we did last year.
As we take a look at those year-over-year numbers, talk to me about how we're seeing things and what's going on for both cattle and hog slaughter.
Yeah, on the cattle side, we're down 4.7% relative year to date relative to last year. And on the pork side, up 0.6%.
All right, cold storage out earlier this week. As we take a look at what's in freezer stocks or looking at freezer stocks, let's start first with that beef number.
Yeah, so all good news generally when we look at these stocks on the beef side. We were a little less than about 435 million pounds of beef in freezers. That's down 9.5% relative to where we were a year ago. And you look a little bit longer term, and that's the lowest March inventory since 2014.
When we think about some lower stocks and looking at lower inventory, how does that potentially shake out for whether we're looking at domestic demand and the price side of things, but then also that global picture?
Yeah, so I think it all spells good news on the demand front, both domestic and international. Always looking for these, when did we happily build stocks? And for the most part, that's going to happen in periods where we slowed demand for a period of time. And boy, the first 3 months of this year, we've done nothing but suggest demands continue to be quite good for us.
And not just on the beef side of things.
That's absolutely correct. You look at the pork side, even tighter, about 460 million pounds of pork in freezers at the end of March. That compares to about 540 million pounds 1 year ago, down 13.1% relative to a year ago. So tight on the pork side. And although we don't talk chicken very often, chicken supply is also down 100 million pounds. All those meats continue to show below year ago inventories for the first 3 months of this year.
When we look at a decline in beef stocks, a decline in pork stocks, a decline in chicken stocks, obviously it means demand is showing strength. Does that also show some strength maybe about consumer confidence, or maybe some indications that we're doing okay economy-wise, that consumers are still spending?
Yeah, absolutely. I think it's a good sign that things seem to be strong on the demand side of the picture. It doesn't take much to change that, but certainly what we've seen here the first 3 months, despite generally higher prices, especially for beef, no real consumer step back, and demand looks to be good.
All right, let's get into this livestock slaughter report. That's kind of what we've been waiting on this week. As we take a look at beef production for March, down at a pretty good clip.
Yeah, that's right. 2.1 billion pounds of beef produced March of 2024. That's down 12.3% relative to March of 2023. And if we start to look at the first quarter here, we're down nearly 4% in terms of beef production.
All right. Do you want to talk beef cow slaughter here and talking about cattle weights, or do you want to wait until we get through pork production?
Let's go. We'll just go ahead and talk cattle. How's that?
Let's do that.
So 221,000 head of beef cow slaughter, according to the report this week. That's down a measly 22.4% relative to March of 2023. So down significantly. When you look at year to date, we're down 12% in beef cow slaughter for the first quarter of 24. That changes the thought process here, at least, and I want to be careful not to jump to too many conclusions here, but when we look at quarter one, federally inspected beef cow slaughter relative to total beef cow inventory. So in 2023, we were suggesting about 3% of that beginning inventory was slaughtered in the first quarter. Given the data we have right now, it would suggest the first quarter is about 2.7%. So we're down. Just to make sure we're all thinking about this correctly, back in 2015 and 2016, we were right about 2%. So those are years where we know we grew the beef cow herd. It's just that we've kind of come over the crest of the hill, if you will, and what happens going forward will be equally important. Maybe this is the first sign, at least in some parts of the country, we're seeing beef cow inventory trying to start to turn around.
And we'll see this number monthly, unlike heifers placed on feed, which we won't get for another 3 months, correct?
That's right. We'll get monthly beef cow slaughter each month. And that will give us a little bit of indication of whether we're holding cows longer. We need both sides of that equation to get a good idea of beef cow inventory, but these are the two pieces we're going to be looking at if we don't get a July cattle report.
Maybe if we keep talking about that July cattle inventory report from USDA, we can help manifest its delivery.
We can hope. I am not overly optimistic we're going to be able to do that, Megan.
All right. So maybe the first sign that things are slowing, which could be a good sign eventually, but we're not connecting all of those dots yet. Just a little, some data points of order, right?
Yeah, and let's make sure, so this doesn't turn around and beef production go up for the remainder of 2024. We're talking about the beginning of this, and you're still 18 months, 24 months down the road, but before we get any, I think, real serious discussion about more beef production on the market. So let's keep in focus what we're talking about today.
All right, let's talk pork production. As we take a look at pork production for March of 2024, also a little bit of a pullback from where we were a year ago.
Yeah, that's right, Megan. Actually, I think this is part of the positive news for pork producers as well. So 2.25 billion pounds of pork produced, down 9.6% relative to where we were March of 2023. And you look at the first quarter now, and we're basically unchanged. We're up 0.3% in terms of Q1 pork production this year relative to last. That's some good news. I go, the other thing I think on the pork side that's important, not only was slaughter down hard, but so were weights, down 2 pounds in the case of pork. That's the other side of the equation for cattle, where we were up 23 pounds for March of 24 on the cattle side. We're actually down a couple pounds on pork, which just tightens things up a little bit more as well.
And that's the story that the pork sector almost needed to hear after another strong year of production in 2023.
Yeah, that's right. And maybe this begins to give us more confidence that perhaps there's fewer hogs out there to go here in the next quarter at least, and so maybe there's more positive news as we look ahead on the hog side. It is nice to at least hear some stories of producers who will say, "Hey, I'm beginning to see some hogs that are breaking even for me." It doesn't climb them out of the hole that was created with the tough times of 2023, but the hole's not getting deeper at this point, perhaps.
All right, as we wrap things up today, we take a look at next week restaurant performance, jobs, and monthly trade data. On the trade side of things, Scott, what are you looking for mostly?
Yeah, so I think both beef and pork trade here are important. I don't expect we're going to get strength in beef trade, just given we still have fairly high prices. I do want to see what's happening on the import side of the equation. I think that'll continue to be strong. On the pork side, just continued strong export data, and probably that continued to destinations that typically haven't been the ones that have grown. I know Mexico is going to be important to that number that we get out next week, but that to me is the big pieces of monthly trade data.
Scott, as we also talk about this, thinking about the beef trade side of things, how important is it too that we're maybe in some of these markets, we're developing demand for underutilized cuts of meats, maybe some different elements that does that also potentially grow that long term once maybe US beef pulls back and beef production, that they have these and keep buying these different cuts of meat that we don't necessarily use as much here?
So absolutely. Things that have no value here that consumers in other countries might want and be willing to pay for, all of a sudden makes that carcass worth more at the end of the day. So finding those opportunities is certainly important, and helps our cattlemen at the end of the day.
Scott, always great to see you. We'll check in next Friday.
Thanks, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments. And for market updates twice daily, make sure to check out John Perkins' Market Minute. Have a great weekend. I'm Meghan Grebner for Brownfield.